Welcome back to Alpha Recap. Glad you could join us. The market day is in the books, and we've got a lot to unpack from March 26th. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. There was definitely a risk-off tone to the session. Lots of rotation and some pretty concentrated selling in tech names.
So, what really stands out here is the breadth of the move. Give us the top line numbers.
Right. And the number that really caught our eye? The S&P 500 finished the day down about 1.8%. The Nasdaq 100 was down about 2.4%, and the Russell 2000 fell about 1.7%. Yeah, that tracks.
Walk me through the why. Why did markets sell off like that today?
There were a few crosscurrents. First, sector-specific headlines made the day choppy. Communications and media news, some banking commentary that flagged geopolitical risk, and mixed messages in energy. Second, traders took profit in richly priced growth names, which amplified selling in the big-cap tech leaders. Third, we saw rotation into defensives like utilities and into some cyclicals. Materials and parts of industrials picked up flows. I mean, when you step back and look at this, it wasn't a single shock. It was a collection of smaller items that together pushed sentiment toward risk off.
Okay, so this felt targeted rather than a blanket rout.
Exactly. Analysts note it's more of a repricing of stretched leadership than a full capitulation. That said, the tech-led weakness, particularly in mega-cap and long-duration names, was the dominant story.
Let's drill into sectors. Technology led the downside, right?
Yes. Technology was the most pressured group. High growth and long-duration businesses saw traders trim exposure to multiple expansion narratives. Momentum names that ran earlier in the month had the sharpest retracements.
Not a great day for chip stocks and software leaders.
Nope. Conversely, utilities got a relative lift as investors rotated toward cash flow stable names. Materials and certain mining names also showed strength on commodity narratives and merger chatter. So, rotation was real, out of large-cap growth and into some defensives and selective cyclicals.
Right. And the other thing is, how did financials behave? There was mention of geopolitical risk tied to Iran.
Banks were mixed. Commentary that referenced Iran raised a modest risk-off bid, and that increased dispersion within the group. Some banks with perceived higher exposure underperformed, while others with M&A chatter held up better. So the narrative was fractured, not uniformly bad, but certainly more volatile. Honestly, I was a bit surprised by this one.
Let's talk about some individual names and company news that drove action.
Meta was a focal point. The ads recovery and AI spending story continues to attract both enthusiasm and skepticism, which created intraday swings and pressured the broader communications complex. PayPal saw headlines about funds from the Philippines, which highlighted payments flows but wasn't a primary index mover. And in industrials, discussions around Cummins after quarterly commentary created stock-specific volatility. On the small-cap side, biotech filings from companies like Upstream Bio and MapLight Therapeutics created idiosyncratic moves.
So a lot of the stock action was company-specific rather than macro only.
Right. Company filings and 8Ks were really shaping intraday swings, and that amplified the patchwork feel of the market.
Quick reaction segment.
Big move.
Short-term oversold?
Possibly.
Let's pull the lens back to macro and the Fed. With no rate decision today, what were traders focused on?
Markets were parsing incoming economic data and central bank rhetoric for any change in the rate outlook. The overall pullback increased sensitivity to downside growth risk and geopolitical spillovers. Analysts suggest the Fed will continue to emphasize data dependence. So if inflation or employment data soften, the Fed has more optionality. Conversely, if inflation stays sticky, the repricing in growth assets could continue. So everyone's watching inflation prints, wage trends, and scheduled Fed speakers closely.
And volatility. Any signs that this becomes more than a short correction?
Breadth was negative, and volume concentrated in mega-cap technology, financials, in materials. That pattern points to leadership repricing rather than a broad exodus. But if we see a sustained rise in volatility indexes or continued negative breadth, that would argue for a deeper risk-off phase. For now, momentum indicators showed oversold readings in several names at the close. But oversold doesn't mean a guaranteed bounce. Headlines will determine whether this is a temporary retracement or something longer.
So, what really stands out here is how narrative-driven the day was. Little things added up.
Let's cover what to watch next session. Quick bullets.
Earnings cadence and company-specific catalysts.
Any geopolitical headlines around Iran. Fed speakers and economic data like inflation and jobs. Sector rotation follow-through, especially utilities and materials. And volatility and breadth measures for signs of deeper risk-off.
Final quick takes. Give our listeners 3 clear takeaways from today.
1. Selling was concentrated in large-cap tech and growth names. Leadership was repriced. 2. Rotation into defensives and some cyclicals showed investors were reallocating rather than outright fleeing equities. 3. The market remains sensitive to macro and geopolitical headlines, and short-term technicals are mixed with some oversold readings, but headline risk can keep pressure on.
Great. 2 last tiny reactions.
Right. And the other thing is,
Yeah, that tracks.
if listeners take one thing away, today was a reminder that market leadership can change quickly when positioning is stretched and headlines come in. Analysts note this looks like reassessment more than panic, but vigilance is warranted.
Thanks, Jonathan. That wraps up our post-close recap for March 26th. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. See you next session.